As expected, Nigeria's Monetary Policy Committee has kept its benchmark rates on hold at 12% for the fourth time in a row. The central bank cited the need to balance inflationary concerns as a reason for its decision. Central Bank Governor Lamido Sanusi said the bank was concerned about a slowdown in global economic activity, lower crude oil prices and domestic oil output.
And the money we needed.
The central bank governor, deputy governors of the bank, at a news conference to brief journalists on decisions taken by the Monetary Policy Committee. First, Mr. Lamido Sanusi listed the global economic outlook, which he says has slowed down, before highlighting decisions reached after a two-day meeting by members of the committee.
The committee therefore decided by a unanimous vote to maintain the current stance of monetary policy without discounting the possibility of changing it should economic and financial conditions warrant such in the near term. As such, the monetary policy rate is retained at 12%, with the symmetric band at plus or minus 200 basis points, while the CRR and liquidity ratio remain unchanged.
Some other areas which the committee says must be given attention to grow the nation's economy include the oil and gas sector, power and agriculture. Mr. Sanusi says the nation's economy might be at risk if all these are not addressed. According to him, the contribution from the agricultural sector to the nation's gross domestic product for the second quarter of 2012 fell to 4%, owing to insecurity and shortfall in rainfall.
The committee reassessed the recently released provisional output data, which indicated a slowdown in agricultural GDP growth. It noted the huge drop in agricultural output that was traced to the following factors: displacement of farmers in the northern part of the country owing to security situation, inadequate rainfall, and increased production costs due to the partial removal of fuel subsidy in January. It also noted the decline in oil and gas production and the recent revelation by the oil minister of the loss of over $7 billion of revenues due to oil theft.
The central bank chief also announced that increase in electricity and import tariff may lead to inflationary threats.